Hi traders, and welcome to Trading Talk episode 156. Before we get started with today's episode, the risk warning, which is this presentation is provided for information purposes only and should not be regarded as financial product advice. Any testing results shown today do not represent actual trading, as it is simulated, and simulated performance results do have certain limitations, unlike an actual performance record. Let's get started with today's episode then, which is called Break the Volatility. Just to reintroduce myself, my name is Matthew Shirtcliffe and I'm the senior trader here at TradeView. I've been here for around 3.5 years now, and I've learned how to build and trade my own automated systems after completed the systems building program here. You will have seen me in some previous episodes, and in fact this particular episode is related to this month's webinar on volatility, and I'm going to be sharing one of the models which I was discussing in there and some of the key techniques to be able to manage and take advantage of volatility. Okay, so a little bit about this episode. We're going to complete the build from a recent webinar, as I just mentioned, so we'll build the full system together and test it out. We're going to share some of the key techniques that I use in my trading to be able to take advantage of volatility. That's be able to adapt and be more dynamic in volatile markets to manage the big swings. And it's going to be basically a complete model that you can test across several markets. I'm going to test this one today on the indices, albeit you can also replicate this model on the sell side and be able to test across FX as well. I'll discuss that with you soon. So a little bit about the idea. I wanted you to be able to visualize what I'm looking to achieve with this particular episode. So essentially what we're going to look to do, we're going to use the Bollinger Bands, which is on my charts here, and I'm going to be looking for a breakout of the Bollinger Bands. Now quite often you see that this might be an entry where traders want to go short, but with this particular example I'm actually going to try and go long, because what I'm going to look to do is trade the breakout of the Bollinger Band. So we're going to use a 2 standard deviation, so we're going to look for a squeeze in the market and then a push out. So we're going to look for that move, that breakout into volatility. So essentially we need our bar, which is this trigger bar here, to have opened below the upper Bollinger Band, which is this line here, and then close above it. So that's one of the criteria. And we must also break the high of the last X amount of bars. In this example I'm choosing 10, so this one would have been able to execute because we not only opened below and closed above, but the close was also higher than the previous 10 highs. So that would have been a good trigger. So the stop loss which we're going to use a volatility based stop, and that's going to be using an ATR multiplier. So for those who aren't familiar with the ATR, it's a cool indicator that we use with a lot of our volatility models, and that is going to be looking back at what is going on in the markets prior to when that trade is triggered, and then we're going to be able to be dynamic. So the stop loss initially we'll be using an ATR multiplier, and we'll build that shortly. And then what we're going to look to do, so that's the entry, that's the stop. Remember, I haven't got to take profit on this at all. Essentially I'm going to be taking profit as the trail stop by an ATR factor continues to move higher, and then I'm just going to take profit whenever the market tells me. And what I mean by that, I'm going to look to squeeze as much as I can out of that that big move in the market. Let's call it that break of volatility as we're discussing here. So I'm going to use a volatility based stop, and then my exit isn't going to be by a fixed point. It's going to be when the market comes back around, and I'm going to allow the market to tell me when I'm wrong, basically, or when I'm right and I've squeezed as much as I can. I'm happy in volatility because the market might take a sudden bounce and bounce back up. That's fine. I'm going to take myself out with profit. So no fixed point take profit, purely trailing by an ATR factor, which is going to be the same ATR factor as we used in the stop loss. So in this particular example, let's just say we would have taken a long trade here, market moved up, trailing stops probably moved up, maybe it would have moved higher, but let's say it got taken out back here, and that would have been a slightly profitable trade in the end. So that's the idea of the actual entry, and with volatility in mind, we're using the ATR to be able to be a bit more dynamic in terms of how reactionary our stop is. Now, another key technique that I use when it comes to managing volatility is the money management side of things. So I discussed this in the previous webinar. Now, what that means is we can create a function which is going to change the lot size depending on volatility in the market. However, having said that, we need to ensure that we're staying within our main position size ruling. And for those who aren't aware of that, go and revisit Unit 2 of the Systems Building Program, where we share with you our rule structure for money management. So I've still got to ensure I'm staying within that. And essentially, this is going to allow you to be either more aggressive in volatile markets or less aggressive. So with some models, you might want to become have a higher lot size. You want to take advantage of that move. However, with some trend-based models, for example, you might want to be less aggressive and scale things back. So it's going to be a bit more adaptive to what's going on in the markets. You might not want as much risk on the table when the markets are volatile. So that's what we're going to discuss and be able to develop with our volatility position size. And how we could do that. So I've just given an example here of how it could be done. I'm going to relate things today to indices, but it could definitely be done for FX as well, no problem. So essentially I'm going to use the ATR again, and I've selected an ATR period 5. Again, that's a variable which could be played around with, and I'm going to say basically if the ATR period of 5 is greater, so over the past 5 bars, is greater than the ATR period 14, so we've got a wider, we've got a smoother and a slower ATR, and that's going to be times by an ATR factor. So I'm going to use, for example, a 1 in there. Then I'm going to set the lot size, so we can build this and set the lot size to X. Okay, and then we're going to use the same calculation, but this time we're going to times it by a different ATR factor, let's say by 2. So then that means that there's been more volatility in the markets over the past 5 bars. And we're going to set the lot size to Z. So again, you could position in which way. You could become more aggressive as it scales up, or we could decrease. Alright, then finally, we could do this 5 times, guys, but what I'm going to do here is I'm going to set it to 3 different occasions where it can change, and then I'm going to say times by an ATR factor of 3. So when we've got some big volatility in the markets, then finally set lot size to Y. So let's go ahead and actually open up TradeView X, and let's start to develop this strategy. Okay, so now I've got my TradeView X platform open. We're going to build this strategy together. You can see how I've renamed this to TT156 BBT, so I've called it Band Break Trail, just for those who are unaware of the abbreviation. So essentially what we're going to do in here, I'm going to limit my orders, so I only want 1 open order at once, because in volatile markets I'm not really keen on having many orders open, because things could get out of hand and out of control quite quickly. So I'm going to set that to 0, so we only allow 1 open order at once, and then I'm going to build my trigger bar now, which if you remember was the bar opening below the upper Bollinger Band. Let's get bands. Period, shift. Let's think if we need anything else. We need our mode because we want to reference the upper, and then the period I'm going to select to 40 again. These are some variables which we could look to test. I'm going to duplicate that, and I'm going to say now the close of that bar must be above the upper Bollinger Band. So that's essentially rule number 1, let's say. Rule number 2 was that that bar, remember, also has to have closed above the previous X amount of highs. So let's get our close, and then for this one we're going to go into bars. We're going to get our highest high block. So if the bar closes greater than the bar high, the highest high, count 10, shift 2, then we're going to enter a buy trade. Very simple. So I'm just going to build the buy side for now, guys, but this can also be replicated on the sell side, that is for sure. So we're going to need to create some variables here as well. So I'm going to start to do these, and you can do this with me. So I'm going to call one of them vol lot size. I'm going to create one and call it ATR factor. and one which is called vol factor. Vol factor. Okay, let's just let's do this. So my ATR factor actually should be ATR factor. Okay, I'll do that in a second. So let's go into functions, because now what we're going to create our exit, which is the trailing stop. So we're going to select our all long orders, and then we're going to modify the stop on the open of a new bar, and we're going to modify it to the ATR factor. So let me show you how we can do that. So now I am going to make a function. So let's go in here, and then we're going to create our vol factor. Okay, so I'm going to go into values, variables, vol factor. So this vol factor, this is where we can test how big our trailing stop is. So I'm going to set that to a default of, let's say, 2 just for now, and then we're going to times that. And then in here we need to be grabbing our values. So I'm going to show you something as well. So ATR is obviously our volatility, we just agreed on that one. So period 14, again, this is a variable in which you could have a look at changing. Shift 1, and then I'm going to multiply that by another variable, and the reason is because if you were looking to build this on symbol calculator, if you were looking to build this model and do some testing on FX, then you would need this little calculation in here. So I've set it to 1 because I'm testing on indices. Now ATR inside MT4 is referenced in price, so for example 0.0010 for a forex pair, whereas an index is already at 1 whole point. And because in the builder here we're using points, I need to use this multiplier here, so I'm timesing this ATR by whatever that symbol is. So if it was Aussie dollar, then I'd be timesing by 10,000. If it was dollar yen, then by 100. Because I'm using indices, then timesing by 1 is fine. So that's what I'm going to use for that. So, and then I'm going to create my vol factor. I'm going to pop that in there, and I'm also going to create vol factor and pop it in there, and we're looking pretty good. Now there's just one last thing which we need to build together, and that will be our vol lot size. So let's go into functions, and then we're going to say if, I'm going to call this vol lot size, and then we're going to say if the ATR, so basically if you remember on my final slide just before I closed it, we did our calculation. So we were going to say if the ATR period 5 shift 1, and again this could be changed however you like it really. So if ATR period 1 is greater than an ATR times ATR factor, so we can do this values, so ATR period 14 this time, times by, and then we're going to go in here and do ATR factor, and then let's call this ATR factor 1. So then we'll rename that to ATR factor 1, and then we know what that is. And then we're going to go variables, set vol lot size to, and then in here this is where we can be as dynamic as we want essentially. So I'm going to just test on indices for just the sake of this. So I'm going to set it to 3, and then we're going to go 3, 2, 1. If you were testing on FX, you could do 0. Like let's say you were sticking with the $1 per point rule, you could do 0.03, 0.02, 0.01 for example. So I'm going to change that, and then this one now would have to be a new variable because I'm going to do ATR factor 2, and then in here would set that to 2. Then I can duplicate that again, delete this one, variables, ATR factor 3, and then make that a default of 3. and then in here I'm going to set that to 2 and set that to 1. So basically what I'm saying in this example is when there's more volatility, I want to trade at the smallest size possible. And with Go markets, you can actually trade at 0.1, just so you guys know who are trading with Go and are working with us, then they will allow you to trade at 0.1 of a lot. So you can do even smaller size with Go markets on indices, and that's going to help out if you're trading a smaller account, because indices are obviously a bigger contract. So with that being said, just for the sake of the tester, I'm going to use this. So that's basically my lot size calculator being able to be done. So I'm going to collapse that, and I'm going to create that. I need to pop that underneath there, and then I need to go back into my variables and go on vol lot size, because this figure is just the default, but then it's been set to them levels inside there, set to the variables, sorry. So clean up blocks, and that should be our complete model now. So that looks fine. Okay, so let's go and test this model now. We're going to push it to tester. Alright, and let's select some of our markets. So what I'm going to select, we're going to get our Dow, we're going to get the US 500 and Hang Seng. Like I said, you can test this on more markets, more time frames. I'm just going to do it on the one market and time frame just for the sake of it. And in here, of course, we've got the ability to change our symbol calculator and also our vol factor. So essentially that means our vol factor, if we just go back to here, was our the size of our stop. So whether it's trailing stop or the first and foremost the fixed stop, so we've got the ability to change that. So that's the only two variables that we've got in here at the moment, but like we said before, there's quite a lot more that we could go about testing as well. We could test the count, could test the periods, ATR periods, quite a few things, but for the sake of it, we're going to just test as it is with a vol factor of 2 in here. So I'm going to hit start, and we're going to let it simulate its performance through here. So whilst that's just testing, and we'll let that run through, I'll just go over a couple of things for those who would like to translate this model and build the short side whilst my results are coming through. So what I'd be wanting to do is basically flip all this logic around. So I'd be wanting to duplicate this entire section, and then basically I'd be flipping all of this round, all just to the other side, and then I'd be doing the bar closes less than the lowest low, etc. Everything else though can stay the same. Obviously we'd be doing a sell, vol lot size, we could just use the same plugin that we've used there, but on the sell side. And then obviously we'd do a different trailing stop as well. So that's pretty much it, just basically build and replicate this and flip it over. So we could be able to do that, and then you could have the ability to do some testing on FX and have a play with that as well. So we can see this model has got some pretty cool results here, which we can see took a bit of a hit this year on the S&P, but nevertheless, if we look at our multiple graph, it's getting some pretty consistent results across the board. US 30 Hang Seng has also been quite impressive, and this is just on the M30 on 3 markets, so I'm confident if you were to do some testing on more markets, you might be able to get some even better results across the board as well. So that's pretty much it from my end today. I'm pretty happy with the state of the model as it is. As always, interested to see what other improvements you could add if people want to test it on some other markets. I think I've also tested this on gold as well, and also got some good results on gold, so you can have the ability to do that. Okay, I'm going to just bring up the international trading competition and give a shout out to a couple of people who are doing quite well in here. In particular, Jan P, who's a trader that I work with from Sweden, been working with me for a couple of years now, and he's doing a really great job. So well done to Jan. He's been on the top for a little while now. Again, the sprint will finish at the end of this month, so you've got a couple of weeks left on this sprint. Let's see if Jan can keep the top on that one, but he's got some close competition here, 136 and 100% from Mahesh and Willie. Willie, a client of TradeView. Joe, shout out to Joe. He's done a Trading Talk episode with me, episode 130, and he's up 70% on the sprint now as well. So good luck to Joe. Jan is of course on top of the marathon, and 337% is well clear at the top at the moment. In terms of the conference, guys, I know there's been a lot of people asking me lately, is it still going ahead, etc., with the current situation, lockdowns in Melbourne. Conference definitely going ahead. We're in close communication with the Sofitel. We do have some online options available as well, guys, so if you're watching from overseas or interstate Australia and you're thinking, oh, I won't be able to get to Melbourne as much as you'd love to, we do have an online option. So if people want to just reach out to me and ask about that, I can discuss what that looks like and explain, because you don't want to miss out on these three traders. These guys are going to absolutely kill it. Robert Carver has been recommended by not only the 2019 speakers but also 2018, so be sure to check it out. You can register your details here, or you can reach out to me via my email, which I'll just bring up in a sec. But these are the systems that are going to be shared. Again, just go to algotradingconference.com. So in summary, guys, we've developed a really simple concept, but now we've added some techniques to manage volatility that I use in a lot of my own trading systems. So you can use this idea, you can adapt it, you can test it on more markets, you can use the entry, you can add to the entry without overcomplicating it, because we've got a simple template here. But we've got a working model which you could put on a demo account. Ask me some questions about it should you wish. I'm keen to hear what other additions to the model you might want to make, and also what you make of the volatility money management too, which is a technique I've introduced to you today. So I really appreciate everyone joining this episode. I'll speak to you in a future episode. Of course, my email and Skype are here for any questions or anything along those lines. But for now, thanks everyone for watching, and all the best with your trading. Take care and speak soon.